Buddy, welcome back to another episode of Bitcoin and Markets. Today is going to be a live reaction of the CPI. I am streaming on YouTube, Rumble, Telegram, Twitter, Twitch, all those places. So if you're not following me there, and you'd like to listen to the podcast there, go give me a view, like, maybe a comment. That will help the show reach more people. Appreciate everybody for joining me. Okay, this is where we're going to go first, to the website. Bitcoinandmarkets.com is the home base. Check it out. You can sign up for the free tier, which is just getting the emails of all the content that I drop. Then there's paid tiers to help support the show, and the premium tier, the professional tier, that you can get my premium market analysis of the fundamentals, the technicals, the forecasting, what I expect going forward for Bitcoin and commodities and other things. So check out bitcoinandmarkets.com. Okay, let's take a look at the charts before we get into this preview of the CPI, which should be dropping at 8:30 a.m. Eastern time. So we have 7 minutes to go through a few things before that drops. And here we go. Bitcoin price, 26,229 right now. A little bit green candle over the last few hours. Let's go back. Let's go to an hourly chart. And we can get rid of some of these moving averages. And it's looking like it's breaking out from this consolidation level that we dropped down into on the morning of the 10th, or overnight US time on the 10th. And we're slowly working our way out of that. This could also be a fake out. Let's go to the 4-hour, because this does kind of give you this little view of a bear flag. So let me draw some lines on this chart, and then I'll share it with Telegram. So trying to be cognizant of my time, because the thing is going to drop here, CPI. This is the little bear flag. And you can see we're kind of going up on the front of this, or on the top of this, and trying to get out of this bear flag up higher. I think personally there is not. Yes, there is all of this stuff going on in the Bitcoin space as the scams get taken down a notch. But remember, guys, Bitcoin is correlated with stocks. Bitcoin is also going into the halving. Bitcoin is also all these false substitutes that these altcoins provided is now going away. So there's just a lot of bullish momentum. The Bitcoin price should be a lot higher than it is right now. It should be up in the 30s. But these different kind of hits over and over to the psyche of the market is keeping Bitcoin, the price, kind of down. So I do expect that to turn around and us to go higher. Let's take a look at the stock market future. It's a little bit down, but nothing spectacular so far on the day. Okay, let's jump into this CPI preview. We have 5 minutes until CPI drops. Let me share this tab. This is the BLS website for the United States, and it will just show up here in this kind of section on the right. It will come up as May. Just a reminder, April was 0.4% month over month. But let's get into back. I don't like to switch tabs. I'm sorry I'm doing that. It does mess with the streaming software, and it kind of cuts my audio out sometimes. But okay, this is the CPI preview this morning from Zero Hedge. And in our weekly event preview, we said that while the FOMC on Wednesday is the obvious highlight, that's coming up tomorrow, guys, Tuesday's CPI print is probably the event of the week in terms of potential volatility, as it could impact final pricing for the FOMC and impact terminal pricing as well. Here is what the street expects. So Wall Street expects this morning. They expect core month over month to come in at 0.4% and core year over year to be 5.2%. And I think this is interesting. At least people are starting to lead with month over month, which has been one of my sticking points for this whole entire cycle, is Nobody really cares about year over year because it's such a slow moving average. And I will talk about why that is here in just a second. But core also is extremely slow moving. Remember on the way up, the headline was 9 and everyone was talking about, oh, it's 9-10%, but core was still down at 3 or 4 and never really, it got eventually to 5, but it's sticky. Okay. It's much more sticky. That's the reason why it is core, because the headline includes food and energy, which typically tend to be more volatile. They react quicker. Same with shelter is a slow moving component. So, but if we want to know where prices are going in the future, what to expect 1 or 2 months down the road, we don't want to analyze the stickiest components. We want to analyze what's going on with the leading indicators, right? So anyway, headline now is estimated to be 0.2%. There is a chance that it comes in under that. I don't think it will come in much above it at all. Headline year over year will drop almost a full percent from 4.9 down to 4.1. And let me bring up my website because I'll show exactly why this is. Okay, 828. We have a little bit of time here. So this is the fundamentals report that came out yesterday, and I went over that in a live stream, but I included this one chart in here. And this is the month over month prices. Now you can see this month, this red little tick on the end here, this is what is expected, down to 0.2%. May of 2022, that's the one that's going to fall off the year over year number. That came in at 0.92. And next month, June of 2022 is going to fall off, and that came in at 1.2, basically 1.2%. That's the one that's going to fall off next, being replaced probably with another 0.1, 0.2. So these are big numbers. The highest numbers printed in this whole cycle are falling off this month and next month. So that is going to cause the CPI to crash. Okay, 829. Let me refresh this tab and see what we got. It's still April. Okay, let's get back into this. I wanted to see what they said about shelter. So here's shelter. Goldman forecasts additional slowing in shelter inflation. That's because the bank believes the March-April slowdown in shelter categories was genuine and reflected a waning boost from the post-pandemic lease renewals, or equivalently, the catch-up of continuing tenant leases to market rates. So remember, shelter is a big-time lagging indicator because you don't renew your lease every month. You renew your lease once a year. So there is this lagging indication on this. So, okay, that is the preview. Let's go over here, 830, share tab, still April. Still April. It's 8:30 by my clock here. What's going on, BLS? Refresh. Guys, thank you for joining me. Ansel Lindner, Bitcoin and Markets, live streaming on YouTube, Rumble, Twitter, Twitch, and Telegram. Still April on BLS. We're reacting to the May CPI drop. It's supposed to be at 8:30. It is 8:30 right now, so we will see how long it takes for this to propagate. May, there we go. Oh, it did come in below expectations. CPI for all items rises 0.1% in May. Shelter and used cars and trucks is higher. Let me pull this up. Here we go. Wow, that's a big, it undershot the low expectations of the consensus forecast here. And I was just saying 2 seconds ago that there's a chance it comes in below this 0.2%. And look, guys, 0.1%, if it comes in 0.1% next month, we're under 3%. on the year-over-year number. Boom. I think this gives Powell a huge amount of room to pause. Wow, this is going to be a pause here. Let's read into the CPI here. I'm going to zoom in for people so they can see this a little better. So the consumer price index for all urban consumers rose 0.1% in May on a seasonally adjusted basis after increasing 0.4% in April. The U.S. BLS reported today over the last 12 months, the all items increased 4% before seasonal adjustment. Now remember, June of 2022, the chart that I showed just a second ago was 1.18% in 1 month. Now, if next month we have something that is basically 0.2% or under, we're going to be under that 3% for the year over year. And that is what the normies, that is what the headlines are going to talk about. Under 3%, back under 3%. So this gives a huge room for Powell to pause this month. We're going to take, before I end this live stream, we're going to go over to the FedWatch tool at the CME, and we're going to look at what the market is doing for this. So the index for shelter was the largest contributor to the monthly all items increase. So shelter, the biggest lagging indicator, is still the largest contributor to the increase. What's going to happen when that keeps coming down? It's going to keep coming down, keep coming down, keep coming down. The CPI is going to drop. I am expecting the rest of this year to have at least 1 month that is negative month over month CPI. Okay, followed by the increase in index for used cars and trucks. The food index increased 0.2% in May after being unchanged in the previous 2 months. The index for food at home rose 0.1% over the month, while the index for food away from home rose 0.5%. Well, that's another reason to eat from home, right, guys? Tastes better anyway, and it's healthier. The energy index, in contrast, declined 3.6% in May as the major energy component indices fell, or indexes. I don't know why they use indexes versus indices. I don't know what the difference is. The index for all items less food and energy rose 0.4%. Okay, so core 0.4%. That came in as expected, same as last month. Okay. All right, so that's it. Let's take a look at the charts, guys. Let's dive back into the futures. This is delayed, unfortunately. So we can't even see that. So let's go to Bitcoin and see. We got another little jump, 26,300, broke out of this channel that I had just drawn, or this bear flag. Drone, whatever. Sharing that again with Telegram. Okay. Big downside surprise for CPI. I wonder what all the talking heads are saying right about now. Okay, DXY is falling not significantly. Let's go to the daily so you can see that this is not a super significant drop. And I expect that to turn around. I talked about the dollar yesterday on the live stream, saying that, Europe now is in an official recession. China is probably in a recession, but we'll never know because they never will admit anything like that. They are cutting their interest rates. They have cut their repo rates, and they've cut some other rates over the last week. Now they've had 2 different kind of cuts. So they're probably in recession, and the U.S. is not. The U.S. is not. And it looks like Powell could cut rates, or at least pause, which is hugely psychologically bullish. And where is the money going to flow from the two major recessionary economies into the United States, into the U.S. dollar, into U.S. stocks? This is going to be huge. And of course, that's going to push the dollar higher. It's going to cause a dollar shortage, a dollar squeeze. It's going to increase the debt burden for these people. And then what do? They search for monetary alternatives. So we're going to hear, as the dollar goes up, we're going to hear increase talk about different currencies used in bilateral negotiations or trade agreements. And we're also going to hear of more Bitcoin stuff, because Bitcoin is an alternative that you can settle instantly all over the world. What's a better import-export currency than Bitcoin? Nothing. So we will be hearing a lot about that. So even in a dollar bull environment, Bitcoin still gets a bid. Bitcoin gets a bid in a bullish dollar environment and a bearish dollar environment. So stocks until 15 minutes because I'm still on the delayed time, but Bitcoin is looking strong here. Let's see, what else can we look at? Let's look at, oh yeah, CME, FedWatch. I'm going to bring that up. I mean, this is probably delayed too, but at least we can talk about this. Okay, so CME FedWatch tool has a pause at 79%, up from 73% when I looked at this yesterday. So it has increased, and it will probably continue to increase throughout the day here. So very likely we're going to get a pause. My initial reaction to the CPI was, wow, this gives Powell, well, one, my initial reaction was, man, CPI is really crashing. Two is it gives Powell the space to pause. And I really do think he wants to pause. If you guys are familiar with my content, you know I'm not a basher of Jay Powell. Like, just not being a basher makes me a Jay Powell lover, I guess. But yeah, I think Jay Powell wants to pause. He has the MO of pausing. He doesn't want to go down in history as an evil guy that crashed the economy. He wants to go down in history as being a good Fed chairman. So he wants to balance this. And I think a pause will do that, depending on how they don't want to be too dovish, right? I'm just trying to think of what they would think, because it doesn't really matter, but they don't want to be too dovish and let the market get away from them, let inflation heat up again. But that's I think he does want to pause. And the markets are pricing in a bunch of cuts by the end of the year. So sometime between now and the next few months, we're going to have a pause and probably a cut. So is it this month? This CME tool is saying it probably is this month we're going to get the pause. So, okay. All right, guys, that is it from my live stream. Thanks for joining me. Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com for all of my stuff. All of these live streams, I typically do Monday, Wednesday, Friday now for live streams on all of these channels: YouTube, Rumble, Telegram, Twitch, and Twitter. And then on Thursdays, I live stream with Bitcoin Magazine on all their channels with FedWatch, where we go through specifically central bank stuff. So, okay, guys, that is it. Thanks for joining me, and have a good rest of your day. Bye.